Now we're going to talk about some of the damage models that we look at in doing in quantifying damages in these cases that we get involved with in construction real estate. There's generally, when you look at the cost sort of methodologies that exist, there's really three cost methodologies that damages experts, look at. The first one's called actual cost method. The second one's called total cost method. And the third one's called modified total cost method. And it really, the methodology that you use really depends on the facts and circumstances of your case. Sometimes you may have more records and more information available. So it really depends on the situation, in terms of what is the right methodology. There's definitely, certain cases we'll talk about today, certain times where you don't want to use, certain methods if you can use other methods that are better and things like that. And so, but these are kind of the three methods that accountants, CPAs look at when doing these types of cases. The next one is, the first thing we're going to talk about today is the actual cost method. The actual cost method is really, you know, you know, focus on the specific identification of the actual cost records, based on the, uh, specific, cost records that the contract uses to quantify the actual total cost damages on an itemized level basis for labor, materials, equipment, and small tools, bond, insurance costs, and home office overhead. Again, this is a good method to use. It's very precise and effective. If you have the availability of, calculating if you have the documentation and the information available to you, basically you're calculating the damages by looking at the actual project cost less the baseline or the but-for cost, and that equals the damage amount. The second method we're going to talk about is what's called the total cost method. This is the actual project cost less the contractor's estimate bid price. That equals, again, this methodology is used. However, it's typically not favored by the courts because it's too simple, because you're basically assuming that the contractor is going to recover the difference between the bid price and the total cost incurred in the performance of the contractor. And, thus it's really only appropriate to use that methodology in narrow circumstances in which the cost overruns clearly identifiable and solely responsible, and there's no other way of measuring the claim damages. So, like one example would be a few years ago we had a situation involving construction input costs. I think it was steel had went up significantly in a contract, and so that would be one easy way you look at the differences in steel prices. But like I said, it's got to be generally should be a narrow situation that you're using the total cost method. Again, it's based on you have to assume that the contractor's bid's reasonable and has no material errors. You also have to assume that the contractor's actual, project costs are reasonably and accurately recorded. And then you're assuming the cost overruns are not the responsibility of the contractor. So, it's very narrow situations that when you can use the total cost method. The last one we're going to talk about is the modified total cost method. The modified total cost method, is where you try to identify and quantify the costs that the responsibility of the owner and address the deficiencies of the total cost method. Essentially, it's a top-down methodology. Um, you take the actual cost less the contractor's estimate of the bid price. Then you back out, you reduce, contractors' caused impacts or overruns. You look at the contractor's bid errors, and then you also back out the, other costs not attributable to the owner. So it's really kind of, it's looking at a lot more factors, specifically. It's kind of a top-down approach. And so, this methodology is used when you have more information where you can identify these other areas that would reduce, the claim damages amount from the total cost method versus the modified total cost method.